Hello traders, welcome to onebesttrade YouTube channel. In this video, I'm going to explain how to enter trade using a candlestick pattern, where to enter, where to keep stop loss, when to consider that particular candlestick pattern. Come, let's explore these patterns. The first strategy, how do you enter Nifty and Bank Nifty using hammer and also inverted hammer. Ladies and gentlemen, what is hammer, what is inverted hammer? Everywhere you get information, every YouTube channel, every Google article, you'll get to know that. But only experienced traders are going to teach you which hammer you need to consider, which inverted hammer you should ignore. So that is what you are learning today. That is what you are learning today. Why this hammer is important? Why not this? Why I am not considering this hammer, but I am considering this hammer? This is a today class, my dear friends. All you need to do is, so I'm going to give you the practical examples. You will get to understand which hammer you need to give a weightage. So this hammer should come at a right level. Then only you need to give a weightage. It should come at a demand zone. It should come at a support level. It should come at a open interest highest level. Okay, where the put rating is high, or it should coincide with higher time frame swing point or a pivot point. So then you need to give a weightage. Otherwise, you should simply ignore. Simply ignore. That is what you are going to learn. So how do you enter hammers? Simple. Breakout of the hammer, you take an entry, keep a SL. Remember this. Take an entry, keep a SL. Sir, what is the first target, sir? Risk to reward based target. You can 10 points risk, 10 points is going to be next target. Or technical based target means the first resistance is first target, second resistance is going to be second target. This is how you need to identify the targets in the chart itself. Inverted hammer, again, it should come near the support. The breakout of the wick, you are going to take an entry. The body low is going to be SL. Is going to be SL. This is going to be entry. The first target is going to be first resistance. Second target is going to be second target, or risk to reward based target. So 20 points stop loss. The first 20 points is going to be first target. Second 20 points is going to be second target. Third 20 points going to be third target. This is how also. It is a target always a dynamic in nature. As your experience evolve, you're going to be very matured trader. So you are going to identify, sometimes you go the risk to reward based, sometimes you'll go dynamic target. So that is how you will identify your own best. So right now you understand this and follow, just risk to reward you follow in the initially risk to reward you follow. Once you become an expert, just hold the positions till the next resistance. That is how you can maximize your profits. So let's have a case study, so you will understand better. You will connect with the last week charts also. So right now let's understand some case study. The case studies you should answer right now. So I will tell you the scenario. So you should tell me, why should I consider the hammer? So this is a previous day price action. The market from the PDL, it recovered V shape. The overall Nifty trend is still intact. Okay, that is still intact. I would like to enter Nifty with this hammer. This hammer is most powerful, most high probable and high rewarding hammer compared to this hammer, compared to any other hammer. This hammer is better hammer. Why? So I want answers from all the experienced traders, and new traders should watch experienced traders' answers. The ball is in your court, ladies and gentlemen. It is important. Why this hammer is important, guys? You see, these are all the candlestick entry techniques for intraday, Nifty and Bank Nifty options. No need to depend on any tips or even one best trade wala. You can take your own decisions. In the live market, we can't give you obvious trades because of a SEBI restrictions nowadays. I used to give obvious trades. I used to put a tool Because of our restrictions, we can't put that tools. Only I can guide you. You can find an opportunity in this area if you get a right bar. That I can tell you. Why this is important hammer and high probable hammer? Because the overall trend is also up and also happen to be double bottom, and it is a demand zone. I'm going to explain what is demand zone. The demand zone is an area where market, the prices will recover very fast with the institutional demand. Market will recover with the institutional demand. There is a thin difference between support and demand zone. A demand zone where the market will go up very fast because institutional demand. There is a support, market will go like this. That is a sentiment driven by every sort of people. Not driven by exact demand, it is driven by sentiment. Both will work, but always demand zone is most powerful than support levels. Why we need to buy? The reason number one, yes, it is happened to be a demand zone, and also in the chart pattern, it is also happened to be double bottom. Right now, you should remember this. This hammer you are giving importance because this is still higher low. The overall trend is still up and happen to be PDL. In the uptrend, PDL is a very strong, important support. In the uptrend, in the daily chart, if the trend is very strong, and PDL is going to be very, very strong support area. If you get a good pattern near the PDL, and that is going to be very good entry, and entry given excellent reward till day high. Minimum 2 good reasons you should have it. Demand zone, PDL, trend is up, we took the trade and given a right entry. Hope you are able to get it. So this is how you need to connecting the dots. Price action trading little discretionary. It is not easy like indicator. Okay, buy signal दे दिया, green candle आ गया, red arrow आ गया, green arrow आ गया. No, it is you need to use a lot of thought process in price action trading. It is a discretionary in nature. And second example, this is a Bank Nifty example. The market is trending since morning very strongly, and afternoon it took a small break and a small pullback. I would like to buy Bank Nifty. This is again a real trade. We initiated with this hammer, the double hammers. So why this hammer is so powerful with a SLF just below hammer, given 300 points instantly. What is the specialty about this hammer? Why not this hammer? Why not this hammer? Why this hammer, guys? The right answer is absolutely market ka trend is intact. The two good reasons are, one is a Fibonacci level. Yeah, Feb levels are 38%. 38%. Yes, 38%. The second reason is there is a hidden rally base rally pattern. Hidden rally base rally. See, this is a rally. This is a one candle base and then again a rally. So this is a pattern I'm going to teach in the coming slides. See, what happened this? The market trend is up. This is a rally, base, rally. This is where market took a support and given an excellent 40 points momentum. Okay, 40 points momentum from all the way from 1500 to we got it, isn't it? So look at this. They broke this level just to hunt the TSL, and then they took the important demand zone. So very good. It's this is a previous day price action. Previous day price action, and next day market opened with a panic bar. After this panic bar also, we did not get panic. We bought with a inverted hammer. Why this inverted hammer given excellent push till the PDH? PDH means previous day high. PDL means previous day low. PDC means previous day close. So these are all important institutional levels where they will initiate some big positions. That's all. The right reason is obviously most of you given right answer. The right answer is PDL and also demand zone. Why demand zone? From the PDL market recovered very quickly. Means if a next day market retest happens, yes, there is an order block. The pending orders can get executed. Yes, could be executed when the market retest happens because the trend is intact. So we took the trades and we are able to write the trend. Very good, guys. Okay, next, how to enter Nifty and Bank Nifty. Single candle reversal pattern. How to enter short trades or put option trades in Nifty and Bank Nifty using a shooting star and also hanging man. Why this shooting star is better than this? Why this hanging man is better than this? Let's see some example, you will understand it. How do you enter? The breakout of this candle, you need to take an entry. This is very basic. You should understand. High is going to be SL. The wick low is going to be entry. The high of this candle is going to be SL. Okay. So let's see some example. You will understand better. Yes, MK. Start with the case studies and tell me why this shooting star is given excellent reward till gap filling. So give me two good reasons. I will take an entry near shooting star breakout. Sorry, breakdown. Day high, come supply zone. Excellent answer. This is how you need to find two good reasons to enter the trade. And right now, second example, who is going to be fastest finger? Let me check. This is a previous day price action. And next day market opened with a gap down and then market started falling. But I would like to enter with this shooting star. Why this shooting star given excellent power and excellent reward? Excellent opportunity to enter the short trade because overall trend is still intact. That is a downtrend. Trend is down. Obviously, that is the first step. We identified the trend. Yes, overall market trend is down. Give me two good reasons to enter this trade. In the downtrend, the nearest gap filling is always a supply zone, the area of imbalance, and where institutions willing to enter again the downtrend. Yes. In that area, are you getting some good rejection candle? Yes. The right reason is, yes, it is a supply zone and also gap filling. Let us check the recent case study. So PDC rejection and also gap filling rejection. The right reason is the PDC plus gap filling. Gap filling. There is one more reason. Obviously, gap filling is going to be a supply zones. Who is going to answer the third case study? I want to see that. So market opened with a good note and then fell like a rock in the afternoon market, given a pullback. And this hanging man given an excellent opportunity to enter Bank Nifty, Nifty short. Why this hanging man given opportunity to sell the Nifty? So given excellent push. Excellent reward this hanging man. What is the two good reasons? Give me two good reasons to enter this hanging man. So yes, there are two good reasons. Day high plus and also supply zone. Two candle patterns. So how to enter Nifty and Bank Nifty using bullish engulfing and bearish engulfing? First of all, you need to enter breakout of these two candles. Entry and stop loss. Entry and stop loss. This is a bullish engulfing and bearish engulfing. So who is going to answer it? This is a previous day price action. Next day market opened with a gap down and then market suddenly took a very good support. Yes. Why should I consider this engulfing, not this engulfing? Why this engulfing given excellent push towards the gap filling? I want two good reasons. I told you in the uptrend, nearest gap filling is a demand zone or an area of imbalance where institutions willing to take their positions again. And obviously that engulfing is coming at exactly that level. So right, two good reasons are demand zone, yes, because of gap filling. So gap filling, this is the two good reasons. Gap filling come, demand zone. Next example, who is going to be fastest finger? Market is going from the day low very nicely with the uptrend. So the trend was very nice. But I want to enter the trend because I don't know this price action. I could not participate. But I want to enter the trend with this engulfing. Not this engulfing. What is the speciality about this engulfing is better than this engulfing? Why this engulfing got failed, right? But this engulfing given excellent opportunities till the day high breakout. See, the reasons, two reasons, how do you find it? See, simple. First of all, in the strong trend, when the market emerging with a strong trend, market may not come for a double bottom. So market is taking a support from the previous swing low, PSL, previous swing low, plus it is not necessarily market has to come from the day low or a previous day low. When the trend is strong, even previous swing low, this is a previous swing low, is also happened to be a demand zone. Why? The rally is also happened with a very decent candles. When the market retests that demand, the market again resumed that uptrend. Plus demand zone. Yes, you should be. And who is going to be answering this? The overall trend is, yes, extremely bearish. Market opened with a gap down. Then this is what happened. I would like to enter this downtrend using this bearish pattern. I want to enter with this bearish engulfing pattern is going to be a good entry. Why this bearish engulfing? Why not this? Why this is most powerful? Give me two good reasons. What an answer, guys. Everybody is given a right answer. It is a PDC come supply zone gap filling. PDC, obviously PDC is a very good resistance in the downtrend market. The PDC is going to be big resistance, also happen to be supply zone if there is a gap. So plus supply zone because gap filling plus gap filling. So there is a three good reasons you can give. What is happened in the Bank Nifty on Thursday? You should tell me. What is happening? What is the trend of the market? What is this trend? Downtrend. Market opened with a gap. Retest the supply zone. Gap filling. Rest is an history. This is what told us. Sell on rise, sell on rise, sell on rise, sell on rise. Given, market given and broken the levels and given an excellent target, all of us. Even extra target on Thursday. So let's go to the next example. Piercing pattern. It is also same like a engulfing pattern. Only difference is the last climax candle. The climax candle. So yes, is not completely engulfing the red candle. It's engulfing partially 70 to 80%. The big red candle near the climax is engulfing only 70 to 80%. Breakout of these two candle range, you take an entry. Yes, sell. So yes, and entry. Yes, this is a stop loss. Let's give a real-time examples. Yes, could you please fastly? This is a previous day price action. Market opened with a gap down and then gap got filled. And again in the afternoon, market took a U-turn after this piercing pattern. Okay, this is a piercing pattern. What is the specialty about this piercing pattern? The last 5 days price action of intraday is very important. It is not only you need to look at only previous day, 1 or 2 days. You need to look at minimum 5 days. Yes, it is a demand zone, and also the overall trend is still intact. There is one more reason to take this. The trend is a next confirmation. The trend is a next confirmation. The overall higher time frame trend is intact, and it is also coinciding with a nearest good demand zone. So yes, evening star, 3 candle reversal pattern, very famous pattern, very powerful pattern. So breakout of this pattern, you take an entry, keep an SL, take an entry, keep an SL. Okay, my dear friends, this is a 3 candle reversal pattern, very powerful pattern, ladies and gentlemen. Yes, my dear friend. Why? This is the previous day price action. Market opened with a panic 3 bars and suddenly we got a very good morning star. This morning star given excellent push till the PDH. Till PDH we got a very good reward. I would like to ask you, ladies and gentlemen, what is the specialty about this morning star? Give me two good reasons. It's a round number and also highest put writing. Highest put writing. Ladies and gentlemen, remember this. When you were not able to find any support in the left side, if you are not able to find any support left side, any demand zone left side, you need to look at the right side. Right side, there is a round number plus highest OI of put option. Highest put option become support, highest call rating become resistance. What is support? Tomorrow there is a big gap down. So I want to find a support based on the open interest data. Yes, there is a put option open interest here. So tell me. So let me check your GK now. Where is the support according to open interest data? Tell me. 19,400 is the right answer. First 68 lakhs. And then next support is 19,300. Very good answer. Both answers are right. There is a very good application for option traders, both mobile application and also web application. Option trader, then option trader. So where you can see this graph, you can identify the where the put writing is more. Where the put writing is more, you can identify in the graph itself. So if you're it is a very easy to look at rather than looking at the figures. You can look at the graph. Look at this. The put writing. This is a call writing. Much higher put writing we could see here. This is done option trader application, my dear friends. It's a very sophisticated application for option traders, both buyers and sellers. If you're not using, use it. Download the violet color application and explore it. So next example, just a second. Why market took a U-turn? When the market first time, Bank Nifty went. The first time it was trading around 41k, market took suddenly a 300 points correction. I would like to ask you, what is this evening star speciality? Give me two good reasons now. Highest call open interest plus round number. Bank Nifty right click, option chain. Very, very sophisticated platform. If you're not using, use it, guys. And let's go to the next. And this is again a one more 3 candle reversal pattern. We call it as a bullish momentum decreasing, bearish momentum decreasing patterns, where if this big candle, small candle and very small candle, big candle, small candle, very small candle, if it comes near the resistance, and we can see such kind of a rejection and reaction. If this kind of a patterns, if it comes near the support level after the big fall, if a market is throwing this kind of a patterns, after a big fall, if market is throwing this kind of a pattern, that is a exhaustion status. The candle sizes are decreasing. You just wait for this hanging man breakout or a evening star breakout, take a trade and ride it. This hammer breakout or evening star, morning star breakout, take a trade and ride it. So this is how you can enter bullish momentum decreasing, bearish momentum decreasing 3 candle pattern, ladies and gentlemen. So very, very simple pattern, but it comes near the climax. It comes near the resistance and support. It comes near the supply zones and demand zones. Do remember this. So now, and the only continuation pattern which I'm teaching you, so that is a rising 3 and falling 3. My dear friends, remember this. This is a continuation pattern, multi-candle continuation pattern. Yes, my dear friend, 3 candle rise. Yes, there is a big green candle, 3 inside candle, again a big candle. Breakout of this range, take an entry, keep a SL and ride it. Falling 3, yes, the trend is down. And again, market is creating a 3 inside candle, again a big rejection candle, that is a red candle. The breakout of this range, take an entry, keep a SL and ride it. By this good note, we are concluding candlestick entry techniques for Nifty and Bank Nifty.